a resource-rich nation, and we know that the way policies are made in some of these countries is not for the vested interest of the citizenry or the country. Policies can actually be formed in a better way to be able to add value to the lives of the people. The current global economic order really is like a jungle. It's either you eat or you get eaten, kind of. So, and because of this, we've seen that where leaders in some countries, particularly in the global south, are driving development, and it's not for the interest of some other nations. We've seen where such doesn't go well, and you have external pressures that in some cases lead to transition by bringing in changes in governance and all that. So some of the leaders in the OIC countries are not in the best position to be able to drive the kind of changes we expect because the political will is either there or not. And you can't expect the average person to be able to drive that. So the hands really are tight for the citizenry to be able to make change around that. The best they can do is at a micro level, individual level, to try and drive and practice some of the values of Islamic economy to be able to better their lot.
Thank you, Mohammed. I was obviously very pleased to see Naz Shah earlier on stage, not only because she's from Bradford, not only because she's my local MP, but also because I think engagement with governments on this topic is really important, because unless we proactively and positively reach out and engage with the powers that be to create the framework, whether it's in terms of governance, whether it's in terms of regulations to support Islamic finance to thrive, I think we will always have an uphill challenge. I want to move on to you, Vladimir. You talked about Islamic finance principles, and you talked about sort of the long-term impact and the returns that are made by following ethical, sustainable practices. From my perspective, I see a lot. I do a lot of disputes work. And one of the greatest risks I see over the next 10 years, not just for the Islamic finance industry, but just across the sector as a whole, is institutions, whether that's sovereign wealth funds, whether that's financial institutions, projecting an image or forecasting things or making statements which are not true, which are not backed up. So, for example, over the last 3-4 years, I think we're seeing a lot of organizations, a lot of funds being labeled as green, as ethical. People will talk about impact financing. And it's all a little bit arbitrary in terms of how do you measure impact? Where's the data that sits behind it? If people are saying this is green or this is sustainable financing, how do we actually measure it? Or how much of it is genuinely just to get shareholders or investors in to invest in something? So to what extent do we think Islamic finance is immune from or can protect itself from issues such as greenwashing, from challenges? Are there any safeguards in place within the industry to prevent that sort of thing happening?
Well, it can't protect itself. My answer will be very brief because it is actually brief. What we need as an industry as a whole, there is nothing specific related to Sharia-compliant finance, Islamic finance that can combat this issue. We need 1, 2, 3, couple of major scandals in this area, which will bring governmental investigation and involvement. Similar to what we had with carbon credits. When it was established that Vera, the biggest issuer of carbon credits, the verification agency, had 84% of carbon credits bogus, they were fake. The measures were taken, and the entire procedure of audit and verification of carbon credits was redone from ground zero. We need same with greenwashing, because these claims are, of course, they're fantastic. Everybody makes them. Even the biggest polluters make the claims that they're green. And well, some of them actually buy carbon credits and declare, so we are carbon neutral. And there's nothing we can do until there's something major happens, which will bring government regulation and audit.
Yeah. As depressing as that sounds,
it is depressing, but
as depressing as that sounds,
yeah.
I think you're right. You're only going to get the level of scrutiny and the safeguards as and when something goes wrong, unfortunately.
Totally.
And unfortunately, that's a reality. Rafi, if I can come to you next. One of the things that I think one of the earlier speakers, it was the Bosnian minister, said something which I found really insightful and resonated a lot with me. He focused on the word Islamic rather than Islam. And I think a lot of what you've just said there about an Islamic economy is about the principles, a bit like what Vladimir was talking about. You've given some fantastic case studies there. But as you said, query how much of that is being done truly on a global scale, on a global level. How do we go out there and make these make that global impact? How do we make other organizations realize the value of Islamic principles? Because for us, it's not confining Islamic finance, for example, to Muslim practitioners or Muslim people. We are ambassadors for our faith. So how do we go out with these case studies and make this really ambassadorial for our faith?
Absolutely a critical thing for us to bridge. Today, I was asking about brands, and many of you will know about Grameen, right? Yeah. And I think we would acknowledge that Grameen is a well-known global success story, or was acknowledged as the pioneer in microfinance, which is part of ethics and so forth. However, it was not Sharia compliant, right? So, so there's a big disconnect, I would say, between the theory of Islamic economy that we are discussing, and we're having all these amazing summits and forums. And my question is, where are these organizations here? Why are they not here? They should be on the stage, actually more than us as academics or advisors, because they are the channels of enablement. They're the ones who drive the socio-economic prosperity. As Dr. Muhammad rightly pointed out, we're behind because we don't control our own money. We don't control our own economy. A fact many of you may or may not know, forget technology that we don't make, forget the planes and the advanced stuff that we don't make. Even halal food, we don't make. When I say we, meaning Muslims. The top 7 largest exporter of halal food products today are non-Muslim majority countries. United States, France, China, India, etc. So I think there is a huge disconnect. And I would say, we have to be positive, as our tradition of Islam tells us to always be hopeful and positive. So I think what's important, that's why I shared case studies. We have a ranking of emerging brands. Some of the brands, from the audience we heard even. I think this next generation of entrepreneurship that's happening, including from UK, by the way, Sohail, I think at a global level, some of the global Islamic fintechs, some of the best Islamic fintechs at a global level are coming out of UK. Some of the best brands of Islamic lifestyle, we heard the modest fashion brands are coming from UK or the United States. So I think we have to engage them. We have to, and they may not be the multi-billion-dollar large enterprises today, but they, along with the existing top players from the OIC countries, which we also map. We have the ranking of top 100, actually top 5,000 corporates from OIC countries, they're there. We have our top 100 list, the minimum annual revenue of the Muslim-owned enterprises from Muslim-majority countries is $5 billion annual revenue. These are large enterprises, Indofood in Indonesia, Ulker in Turkey, Savola, Al-Marai, you name it, Emirates, so forth. These are brands. So I think a bottom-up movement that's happening with startup entrepreneurs, and I think I would consider myself an older generation now, but the millennial Gen Z entrepreneurship within Islamic values-based ecosystem, I think, is the most exciting thing that's happening. Dr. Mohammed, I think even in Nigeria, we're seeing the entrepreneurship from the young Nigerians in context of Islamic lifestyle space. Incredible.
Yeah.
So I think that bringing them to such forums would bridge that gap.
Yeah, no, that's very helpful. I think we've probably got time for one, maybe two questions, assuming the answers are limited. So any questions for the panelists? If I can see any hands go up. Yes, I don't know if there's a mic for the gentleman.
Serial questionnaire.
Hello, hi. My question is more directed towards Mr. Rafi. I just want to ask you, big companies like Aramco and Emirates and in construction, Bin Laden construction, what would it take them to basically switch to Islamic finance? Like, would they see it as profitable? Would it benefit them? How can you sell this finance, the system of finance to those sort of companies? Because they're pretty global and pretty rich.
Thank you. It's been, I'll make it very quick because in interest of time, it's been a very hard sell because, the economic system we are in, shareholder maximization, profit maximization, and we hear from a lot of the scholars here, Islamic principle of economy is very different, but we are operating in a model where profit maximization is the concern of the board of these companies, right? The board is responsible for the shareholders want the maximum return. This is still the case in most of the large corporates across OIC countries, Turkey, Indonesia, Malaysia, because they have to return maximum. The key that we've been able to crack, and I'll give you an example, alhamdulillah, we've been involved in a project whereby the largest sovereign wealth fund, one of the largest sovereign wealth funds in the world, has established a halal product investment company. And we were involved in making that case to them that they need to put and invest in Islamic values-based, halal and tayyib values-based product and services. By making a business case, we need to be able to show that this is actually good economically for us as well. I find that to be the successful way to get in. And when we see the wider value of it, I think the momentum will build.
Can I add just 10 seconds? If Aramco goes full Islamic and it goes on the capital markets, it will destroy sukuk market. It will suck up all the liquidity. It's too big, and our sukuk market is too small.
Thank you both. We've actually run out of time, so I'm going to thank my panel of speakers. And if I was to try and just summarize my thoughts on the session and what we've heard from our speakers, if we think about pathways to prosperity, to me, it sounds like, listening to all the speakers and all the speakers that we've heard so far earlier today, it's a question of we have the answers. We are blessed and fortunate to have the best guidance available to us through the Quran and the Sunnah. And I think it's about espousing Islamic values, which will truly be the answer for prosperity. I think that requires collaboration within the industry. I think it's supporting one another so that we grow and we grow together. I'd like to thank all my speakers. Thank you again. It's been a fantastically engaging session, and please do reach out to them after that.
Thank you very much indeed, Mr. Suhail, for moderating this session. And thanks as well to all the panelists with you. I would like to call to the stage Mr. Yusuf Khalawit for the certificates. And we should start by Mr. Suhail Ali. And now Dr. Muhammad Kabir Muhammad. Mr. Vladimir Malenko. And Mr. Rafiuddin Shakun. Okay. May I invite Mr. Jani to the stage, please? Most welcome. Pleasure. Pleasure. Thanks as well to you, our dear guests. Now it is lunchtime break, and this will be for 30 minutes. Please be back to the room by 3 p.m. to start our fourth session. Thank you very much. Yes. Ladies and gentlemen, may I ask you to take your seats, please, to start our full session for today. Our fourth session will discuss a very important topic that will focus on beyond profit, embedding responsibility in Islamic banks and investment solutions for long-term sustainability. It will explore how Islamic banks and financial institutions can incorporate ethical and responsible practices. We are honored to have with us Dr. Abu Bakr Jabir Abu Bakr to lead this session, and he is the head of the college and vice chancellor of Al Maktoum College of Higher Education. Dr. Abu Bakr remains committed to further of the college's vision and mission and objectives. We'll join to him to the session the first speaker, Dr. Salah Al-Hammadi, and Mr. Muhammad Atif Hanif, and Dr. Widad Mitager. Please, to the stage.
Okay, good afternoon, everyone. I hope you're still with us. I know that's been a very busy morning and we just had lunch, so hopefully people are still awake and alert. And I hope we can still maintain the momentum of the day and keep you engaged. Our session today is on the theme of beyond profit, embedding responsibility in Islamic banks and investment solutions for long-term sustainability. This topic highlights a critical shift in Islamic finance, moving from more profit-driven models towards a framework that prioritizes ethical responsibility and sustainable impact. Islamic finance, rooted in principles of equity, social justice, and risk sharing, is uniquely positioned to champion long-term sustainability. By embedding environmental, social, and governance considerations into financial products and banking operations, Islamic institutions can foster both economic and social welfare. This approach can attract conscious investors, align with global sustainability goals, and mitigate risks tied to climate and social instability, ultimately ensuring resilient ethical growth in alignment with Islamic values. So this is a very interesting topic that we will be debating this afternoon. And in this session, we will hear from three speakers drawn from academia and industry who will tackle this question from various aspects. And then we'll have the normal panel discussion and an opportunity for question and answer. Our first speaker today is Dr. Salah Al-Hammadi. Dr. Salah Al-Hammadi is the Vice Rector for Academic Affairs and Scientific Research at the Arab Open University. He holds a PhD from the University of Reading, UK, an MBA and bachelor's degree in economics from the University of Texas in the USA. Dr. Hamadi has extensive experience in Islamic economics and finance, having previously served as a lecturer at Al Maktoum College in Dundee. His research has been presented at leading international conferences, and he has published in several high-impact journals. He is also a fellow of the Royal Society of Arts and the Higher Education Academy. Dr. Hamadi's paper today, or his presentation, will be under the title, Implementing Sharia-Based and Maqasidi Strategies that Prioritize Social and Environmental Impacts alongside financial returns. Dr. Hamadi.
Good afternoon. Hopefully you had a great lunch and not too tired so far. Well, first, let me honor late Sheikh Saleh Kamel for his vision. Sheikh Saleh Kamel, he's a great contributor to the Arab Open University. And he is, his vision believed that education has power to change lives. And it did change life, as an Arab Open University is a non-profit organization that helped a lot of students. Also, I'd like to take this moment to thank Sheikh Yusuf Halawi and his team for organizing such great events. Today's session that we're going to be talking about implementing the Sharia, Maqasid Sharia strategy, where it contributes to the socioeconomic, environmental, at the same time having a financial return. I believe this is where you change. Green, okay, great, thank you. First, let's look at the first Maqasid Sharia, which is the 5 college or the 5 division of Maqasid Sharia that was implemented by Imam Ghazali. The main 5 that I will go on, which talks about the protection of religion, which is the deen, and why it's important to protect religion, which is, that's where we exist here. وَمَا خَلَقْتُ الْجِنَّ وَالْإِنسَ إِلَّا لِيَعْبُدُونَ. So the preserving of faith and religious practice is very important in the Islamic law, and the Quran emphasizes on the purpose of life, which is to worship Allah. The second one, which is protect of life. Again, this is the college that without these, we wouldn't exist in the universe. So acts like endanger life, like murder or injustice killing. And we've seen lately, I don't want to go into politics, but we've seen lately lots of killing, injustice killing. And these present chaos and strictly are prohibited in Islam. And where the sanctity of life is, key principle. The preservation of the intellect, al-aql, which is, enable, individual to make moral decisions. And that's why the prohibition of the intoxication, so people can make, a wise decision. And then the protection of wealth, which is al-mal. Islamic law mandate that the wealth should be acquired, in halal way, and this will lead to the prohibition of theft, fraud, and the unjust acquisition. The last one in Maqasid al-Sharia, which is the prohibition of lineage or offspring, which is nasl, And it is important for the future generation to preserve this objective. And it's the law who is, related to marriages, why it's important. The inherit law in Islam is also an important, and how this is, having an important family lineage. But however, these 5 objectives, it's not this is the main objective, but if we look at Shatibi, where he preserved, where he talked, the Int'l guy, then he talked about the daruriyat wal hajiyat and the tahsiniyat. And then later on, Ibn Ashur even explained the importance, because these Al-Ghazali looked at it from the personal perspective, but when we look at it from the society, the community ways, there is more into that. And Ibn Ashur talked about the importance of the socio-economic or socio-environmental issue on that. So, well, then what is the Maqasid strategy refer to, which is implementation, as I said, which is a broad objective of Sharia. By implementing this broad justice of Sharia, we can, design as a prioritizing the ethical principles such as social justice, environmental, and ensuring that the financial sustainability. How Maqasid Sharia or Maqasid strategy prioritize socio-environmental impact with the financial return? By aligning these objectives, we can ensure that the economic activity, of course, Professor Mahmoud earlier talked about the intended and what is the substance behind it, and that's the issue. I mean, think of that. We may talk on and on, but if we always gonna go back as an entrepreneur, as an Islamic finance being, have a, shareholders, always will be an issue. So aligning the Sharia with this will, of course, will emphasize that we create a trust, where we create commitment. For example, when Islamic finance or any institution that does not deal with riba, and of course, riba, by the way, it's not prohibited only Islam. As you know, that it's prohibited in all religion, usually. Even in Christianity and Jews, all that was being prohibited. Of course, at some point where the church allowed a small usury because of, commercial things, and now it's normal to see that. The impact of sustainability, prioritizing investment, and which generate the long-term society, an environmental benefit alongside with the financial returns, social justice, of course, guaranteeing their treatment, socio-economic equity on that, where ensuring the benefit of shared broadly. Economic prosperity as well. For example, what we see in green sukuk has been, different places where UAE has initiated back in 2015, the green sukuk, and it's been used for a long-term project, renewable energy and all clean energy as well. And it has its benefit on the environment and the ethical environment integrity. Cooperation and care, encouraging business to collaborate and care stakeholder, contribute positively to the social well-being and environmental perspective. Well then, by leveraging the Maqasid strategy with the sustainable financial return and socio-environment impact, these could be Islamic impact investment, initiate aim to generate sustainable financial outcome while upholding the ethical and social environmental value by impacting investment, by investment in project and addressing social justice, or it could help to alleviate the poverty in lots of nations. And this could go along. I mean, the Islamic, when Bin Ashur was explaining about the society, it goes even beyond the 17 goals of the SDGs. And the environmental sustainability, these strategies ensure the long-term profitability. And I believe I have less than 50 seconds. So the CSR through Zakat and Waqf, we've seen different institutions using Waqf. For example, Bayt Zakat in Kuwait has been using it in education, hospital, scholarship to help the society, halal social business, social compliance with the social enterprise, address social needs. And lastly, the socially responsible investment like Sukuk, which is the green Sukuk, for example. It's being used, as I said, all over. For example, in Saudi Arabia now, it's being used to fund long-term project like renewable energy in Scania, a place where 50% of, imagine Saudi Arabia is the largest oil producer, is being using in Scania 50% of that renewable energy from things other than oil. And in the new NEOM project, 100% will be from non-oil product. Thank you very much.
Thank you, Dr. Hamadi. It's a very interesting topic, and I know that 10 minutes is probably not enough for you to say everything that you wanted to say about this. I mean, just the idea that we're talking about Maqasid al-Sharia in a topic that relates to banking, finance, investment, and so on. It just, you know, remembering how Sheikh al-Ghazali, identified Sharia or Maqasid Sharia as the very objective of Sharia is to promote the well-being of the people. That's very much important to this topic that we're talking about now, because through having new ways of thinking, through open-mindedness, we can implement this in ways that will benefit the people at large. So thank you very much for that. Our next speaker is Mr. Muhammad Atif Hanif. He's the Chief Executive Officer of AlBaraka Bank in Pakistan. Mr. Hanif is a seasoned banker with 24 years of banking experience in leading banks, out of which 17 years have been with Islamic banks. He comes with a diverse banking experience, including retail and corporate banking, both in Islamic and conventional banks, including the Bank of Khaybar, HBL Islamic, Dubai Islamic Bank, and Bank al-Falah. Mr. Hanif will present on the topic of building an Islamic digital ecosystem, integrating technology for social and economic progress. Mr. Hanif.
Assalamu alaikum. I would like to pay my respects to Sheikh Saleh Kamil, who laid the foundation of this very strong and ambitious program of promotion of Islamic banking and finance. I also like to thank Sheikh Yusuf Khalawi for arranging this event and inviting, and this is the best time to hold such an event on such a very important subject. Since I'm a practitioner, so I will speak on how a banker is looking at digitalization and from the Islamic banking and finance perspective. The global asset size of the Islamic finance industry is $4.5 trillion, 70% of which is Islamic banking and finance. But most people talk about it as a very big size and a great progress, which I do not deny. But I like to see it from a different perspective. 25% of the global population is Muslims. Does this $4.5 trillion reflect 25%? It does not. So it means there's a big gap. There's a big gap, and we really have to progress and find ways of achieving what Islamic banking and finance deserve globally. Secondly, even countries like Europe, UK have 5 to 6% population which are Muslims. And thirdly, and most importantly, although Islamic banking and finance concept, riba-free concept, has been launched by Muslims, but it actually does not conflict with other religions. And in many cases, it aligns with the values of large religions. And as it was mentioned by one of the speakers this morning, in Christianity, even riba was declared forbidden, but then it was restored. Considering the sustainability and the ethical values of Islamic banking, it even gels very well with the modern theme of sustainability and the goals of which are backed by the sustainability of financial sector and also environment. When we look at the fintech side, the entire fintech size of the Islamic institutions is today $79 billion. And it is expected to grow at 17% per annum, which is higher than the 13% growth expected in the overall global fintech industry. But even at a higher growth rate, by 2026, it will only reach $179 billion. So looking at the broader perspective, there's a big gap. We bankers, practical bankers, just always look at the gap. And from that gap comes the opportunity. So what is the opportunity? The opportunity is huge for Islamic banking to grow, Islamic economy to grow, and the digital Islamic and fintechs to grow. What right now Islamic fintech industry, technology, and AI is doing is it is creating efficiencies and in systems and processes of the conventional Islamic banking system. Like in most good banks, 70% of the transactions are now being conducted digitally. But initially, when the concept of digitalization started about 4 or 5 years ago, many thought that this is the end of the brick and mortar banking system. Many were skeptical. Even I come from Pakistan, so I can give you an example of Pakistan, that large banks stopped growing on branch network about 4 or 5 years ago. But now they realized that the true potential of economic financial inclusion still lies in the brick and mortar. So one large bank, which is the second largest bank in Pakistan by network, after a pause of 5 years, they have now opened 260 branches this year. Likewise, almost every bank, including ourselves, we have started growing in branch network. So what fintech and AI and digitalization is doing is basically providing strong support in efficiencies and process and systems of the existing banking system. I'll give you an example. What we did. We are in 13 countries, AlBaraka banking group. So we wanted to create a synergy based on our presence in other countries. So we started a concept of inter-franchise collaboration to enhance the trade, especially considering the Pakistan's economic condition last year. It was named inter-franchise collaboration to enhance the exports of Pakistan. So we started with South Africa. We chose 60 leading exporters from Pakistan in 12 sectors which were trading with South Africa. And our counterparts chose 40 leading importers from South Africa. We developed a portal, uploaded the information about all the traders, and then we held a webinar. And in webinar, we connected them. And then after launching the portal, the B2B connectivity started. It was considered such a great initiative, not only by the exporters and importers of both countries, but also by the government and the central bank. We got a lot of customers which were not banking earlier with us. They were interested because we were providing an unusual access to the buyers in different countries. So it became an absolute success. So this is an example of how digital modes are supporting and helping innovation and creativity in the banking system. We held another one with Egypt. The third one was held between Egypt and Turkey. We are holding Bahrain and Turkey very soon. So this is just one example, internal example of how the digitalization is helping create synergy and efficiencies. I would like to say that where the focus is required in digitalization and technology in order to maximize its benefits. Number one, very, very strong role of the Sharia scholars with the technology stakeholders. Because the gaps, obviously, the gaps needs to be identified in the economy, both in the profit economy and the non-profit economy. But then the technology stakeholders needs to get engaged with the Sharia scholars very strongly to find the solution and products for these gaps. And then the strong marketing is very, very important. I think the lack of awareness of Islamic banking and finance is the single biggest challenge for not only the banks and the financial institutions, but also for the consumers. I was speaking to the Secretary General of Azerbaijan Chamber of Commerce, and the lady asked me one question about Islamic banking. And she said, can women open account in Islamic banks? I was stunned. That is this really a question? Because in Pakistan, in order to encourage financial inclusion of women, we incentivize women as products, where we provide free lockers, free checkbooks, free ATMs. It's not really a profitable proposition. We call it Banat account in our case. And it is encouraged to open a women account. Another gentleman who I met yesterday here in London, he asked me, does Islamic banking offer mortgage financing? Now, after having worked 17 years in Islamic banking, I was stunned that this is the level of knowledge and awareness about Islamic banking and finance. Innovation and digitalization is a different subject. Just the basic knowledge and information is lacking. So a very strong marketing is another area through which digital and technology can play a big role these days. There are two major risks that financial institutions take. In conventional side, they take one risk, which is credit risk. But on Islamic financial institutions, in addition to credit risk, we take Sharia risk. If there's in the sequencing is very important. In the sequencing of the process flow of the Sharia compliant products, if there's a small mistake, then the bank has to charity the entire profit of that loan or transaction. So these are a big risk, which conventional banks don't take, we take. So technology and digitalization and AI can really play a big role, and it is actually lacking behind in that area. Frauds and security risk and IT security risk is another area where the AI and technology has to play its due role. Although a lot is being done, but there's a lot that needs to be needed because huge losses financial institutions are taking because of these areas. The chatbots 24/7 can also, which is not the case right now, but going forward, I see a lot of potential of chatbots being used by the financial institutions for Sharia awareness and for Sharia awareness, and robo-advisors is going to be another area of very high focus. Now, this is what the support function is of technology, but where the fintechs can create a niche for themselves is areas like crowdfunding, crowd investment, and crowd charity. If someone has $100 to invest in real estate, they should be able to do it. If someone wants to invest in equity and they have $1,000 for a real estate project or for a big company, they should be able to do it. And likewise, what is very important is crowd charity. If someone wants to sponsor a scholarship for somebody, which is $50,000 a year university, and where they only have $500, so they should be able to do it. So this crowdfunding, investment, and charity is a specialized area which going forward fintechs and IT should be specializing in and progressing. The halal industry is going to be the driver of growth of Islamic banking and economy in years to come. It has 2 trillion of halal meat, $250 billion of halal tourism, $250 billion of halal cosmetics and pharmaceutical, and about $250 billion of halal fashion. Now, the fintechs are going to play a big role, and Islamic banking and finance is going to really drive, because the entire Islamic banking industry globally is now $4.5 billion, and this trade is just beginning, is $3 trillion. So this is going to be going forward a niche of Islamic banking and finance and Islamic fintechs. Financial inclusion, I'll give an example. In Pakistan, 250 million people, 66 million people have accounts in commercial banks altogether, and 111 million people have accounts in fintechs. But the fintech accounts are transactional accounts. They don't keep money. You pay your salary to your servant, they send it to home, the money is withdrawn within hours. So there's no float in the fintechs, but the transactions, they're counting as transactions. But the inclusion is missing. There are at least 110 million people in Pakistan which are excluded from the banking industry overall. So that is an opportunity for the non-bank population of Pakistan is bigger than many countries. So it's a big opportunity for Islamic banks in Pakistan. And one of the reasons, the major bottlenecks for this financial inclusion, the surveys conducted by Central Bank reveals that it's the Sharia sensitivity, it's the riba fear. And from Pakistan perspective, another big development that is happening is the legislation which has passed recently, and the central bank is spearheading it, is the conversion of the entire Islamic banking industry into Islamic by 2027. Right now, it is 22% Islamic. The 78% non-Islamic industry will be converted into Islamic in less than 5 years, and that amounts to about $160 billion. So without AI, strong fintech support and digitalization, it will not be possible. So there's a great opportunity, and I'm very optimistic that the Islamic banking industry, economy, and fintechs are going to go a long way in progress of not only Muslims, but also the non-Muslims. I keep saying that we are the first generation of bankers who are laying the foundation of Islamic banking on this planet, as customers, as bankers, and stakeholders. So we are a very privileged generation. Maybe the next generation will not have that much choice, because most of the Islamic banking would be converted into Islamic. Most of the conventional banking would be converted into Islamic in countries like Pakistan. So every step that we take, every role we play, every decision we make in this direction is should be considered a privilege. Thank you.
Thank you very much, Mr. Hanif, for your wonderful insight. It is a very interesting discussion. How can we harness the power of technology and find digital solutions that would support the expansion of Islamic finance and Islamic banks? I mean, one would argue that the technology exists, so it will be easy to adapt it. But we all know that to integrate Islamic values and principles within an existing system will be quite a challenging thing to do. So while we appreciate the need for a new thinking, a new digital developments and so on, I think there's quite a fair bit of work to do before we get to that point. But I'm sure we can touch on that a little bit more during our discussion. Our next speaker is Dr. Widad Mitajar. Widad is a multilingual academic and researcher specializing in finance, Islamic finance, capital market, and Islamic banking. She's currently a lecturer in Islamic finance and business management at Al Maktoum College of Higher Education. She's also an honorary lecturer in Islamic finance at the University of Dundee and an associate lecturer in moral economy and sustainable development at Abertay University. Widad's paper is titled Best Practices in Innovation and Development, Lessons from Global Leaders.
Thank you. Assalamu alaikum. Good afternoon, everyone. I'm happy to be presenting today's topic, which is Best Practices in Innovation and Developments, Lessons from Global Leaders. Okay. Today, we are facing some of the greatest challenges in human history. We have global increase in population and urbanization problems, environmental degradation. We have increasingly technological advancements, and all this within globalization context. In these settings and in this context, it became crucial to address sustainable development practices. And it's not an option anymore. It's not something fancy that governments need to think about. It's everyone's responsibility. Governments, businesses, and individuals need to start thinking differently. They need to think about solutions that are value-driven. And those solutions needs to aim at building an ecosystem that sustain socio-economic and environmental well-being. However, to do that, we need a tool, and finance is not something that we can ignore. In this context, Islamic finance is offering the opportunity to fund the gap or to fund the funding gap that is nowadays there. So to achieve this socio-economic and environmental well-being, we need money. And the best ethical way to do it is through Islamic finance tools. So Islamic capital market is offering these opportunities through what we call thematic sukuk or thematic bonds. And let's focus on the Islamic side of things, thematic sukuk. I'm sure that everyone heard by now about this array range of colors, blue, orange, green, and the very diverse greens that are available. So green sukuk are one type of these thematic sukuks that focus on funding or to fund a clean energy infrastructure that will help to achieve this net zero goal that all countries have now, and as stated in the Paris Agreement of 2015. And to achieve this, we need to shift the consumption from fossil fuel dependent energies to cleaner sources of energy. And we have, in this context, since we are talking about thinking differently, and we want to mention how leaders of Muslim countries have started that, and they are showing the rest of the world how we can think differently. However, there is something that's important in this context, is that when you want to think differently in the best way for your regional or your country, you need to take into consideration your own country's characteristics and macroeconomic variables or environments. So you can't take what other people have done and blindly adapt it to your country. You need to consider many elements. So in this case, we have the example of Indonesia and how Indonesia, through their green sukuk the initiative started in 2018, and from 2018 to 2022, how the proceeds of this green sukuk reached $6 billion US. And this revenue or capital is directed where it matters. And when we say where it matters, because Islamic finance or the Islamic commercial law is inherently tying the financing to financing actual real economy. So the screening is there, and the proceeds are contributing to funding this gap. We have many projects that were financed and refinanced using this proceed. We're just mentioning some of them, which are the 690 kilometers railway, improving waste management for more than 5 million households, etc. When we talk about thinking differently and finding solutions for a better economic or sustainable economy, we have tools that we need to use. And finance is a tool, is not an aim, or is not the final destination. It's something that when you use effectively can actually contribute or add value to the economy. And technology is another element. So now we cannot ignore technology. Technology is part of our daily life, and it's likely to remain the case in the future in the future. So we better know how to implement technology to achieve this sustainable ecosystem, and because the way we're going to use it now is going to shift or to shape tomorrow or the future generations' world. Technology is highly tied to many of the SDGs, and let's take the Zero Hunger example. By including technology, we can develop solutions that are agri-tech that will help farmers farm sustainably, and by integrating, for example, machine learning into those applications, we can increase the forecasting and predictability for farmers so they know to some extent, because there is no 100% probability, so they know to some extent what could be the outcome if such variables are changing, and so on and so forth. So technology is also part of how cities of the future would be built. People are at the heart of the city, and we have people smart, sustainable cities, and not only smart cities, because if people are not at the center of interest of building a sustainable city, it doesn't matter. So for whom you are building those cities? Cities are not just economic hubs. They are cultural hubs, diversity hubs, economic hubs. So the way they are built and the way in technology should be implemented in building those cities is in the way that it's allowing them to grow, because that's the problem. The problem is that the way that governments and businesses were thinking previously in the past decades is to solve the problem that is happening now. But what about the future? For example, let's take example of a highway. If a highway, we have an increasing population and more people are using cars, let's double the highway and make it bigger or larger. That will push people to even use more cars. What about thinking about the car itself? Do you need to use your car? So if you are living within an environment where you don't have to use your car for absolutely everything, this is the way that people and government and businesses all together, because they are all stakeholders in this integrating technology for people, smart, sustainable cities, they should think about or they should think about the problem in a different way and look beyond what is happening today. We have also this is a quick landscape about what's happening in the technology sector in Indonesia. We have this initiative that was launched by Indonesia as well, that is 100 smart cities, that is about upgrading the 100 cities to be smarter. So when we talk about smart cities, we have planned cities and we have cities that are existing, but we want to make them more sustainable by implementing technological solutions. This is about all the elements that are included into this governmental initiative. Another leader in being innovative and using technology is Saudi Arabia. Saudi Arabia, with its 2030 vision, came with a plan to diversify the kingdom's economy. So let's have a little bit, like a quick landscape, because I don't have much time, by a quick glance to why Saudi Arabia actually launched this 2030 vision. Historically, Saudi Arabia depends on its oil revenue, and it's heavily also subsidizing fossil fuel sector or energy sector, which when we say subsidizing, we mean that the government is using its expenditure to sustain this sector. And it's in economy, when you subsidize a sector, it means that the prices are artificial, they are not true. So the prices that the citizens were paying for were not matching the international prices. And due to the nature of oil prices and high volatility around this sector or these products, when a crisis happens, it means that the government will suffer and it will suffer deficits. So the vision of 2030 was or is an initiative in order to take where you are putting money, injecting it, where it is harming more than sustaining, because the idea behind subsidizing energy sector is to offer some social stability to the citizen, but it is harming more than doing the good. So it's better to direct it where it could help. And we can see from the graph that the amount of subsidy to fossil fuel, it is declining since the launch of the vision in 2016, because 50% of this expenditure was redirected to fund renewable energies. Another mega project that is coming as a fruit of this vision, 2030 vision, is the launch of Neom City, Neom Smart City. So this is a fully planned city. That's the difference with the previous example. It's not upgrading existing cities to be smarter in the way they are dealing or making people's life better. It is a totally planned city that has that actually this project, it is still ongoing project and it's a very expensive one, but it is related to what the previous panel said about environmental experimental economics. This is an experiment because this city will be an experimental hub to test tech-related solution and to enhance renewable energy use, because the objective of this city or this mega project is to use 100% renewable energy. It is very ambitious project. It is still it is still ongoing. However, this is what the leaders in Muslim countries have been doing, and the initiatives that reflect how to go beyond profits. I'm running out of time, this conclusion. So the road ahead is one of opportunity. Thank you very much. And
Thanks very much, Vidal. That's very interesting. And thanks for sharing some of these lessons from global leaders. Indeed, it's fascinating to see how quickly we adapt. Again, the use of innovation and development can have major impact on the way we think and the way we live our lives. I mean, to talk about building in new sustainable cities from nothing, that's major development, not economically, but socially and culturally as well. So thank you. Now we will open our debate, and I would like to, we had three different perspectives from our speakers, and it's very much appreciated. But what I would like to do is bring the debate back to the title of this session, which is Embedding Responsibility in Islamic Banks and Investment Solutions for Long-Term Sustainability. I mean, the aim here is to ensure that Islamic banks and investment solutions are also address or also care about the sustainability or the social impact of their implementation. So I'll turn to Mr. Hanif first, if I may. Banks exist to make profit. And in order to do so, you know, sometimes you have to do things that can be a little bit ruthless, I suppose, if I can put it in these terms. And perhaps discussions about sustainability and caring about environment and so on may not be the main priority. So my question to you is, can Islamic banks prioritize long-term social and environmental responsibility without compromising their financial returns? Microphone there.
I think Islamic banks, by going very proactively for sustainability and socio-economic security of the community at large, not only serves a welfare purpose, but it helps improve their brand. And in the larger scheme of things, it actually helps their business. For example, all banks consider succession risk a serious risk while extending their loans and building their portfolios, and try to mitigate that risk through, you know, the management quality of the companies and the succession of the family and so on. In our case, we are now known as a brand in Pakistan, which actually have invited international scholars to lecture the top corporates of Pakistan on family business sustainability over generations. And I'm very honored to mention the name of the scholar. It is Sheikh Yusuf Khalawi himself. So on my request, he came to Pakistan and gave a lecture to the top corporates in Karachi. So it was something which, in fact, it was for the sustainability, but in fact, it helped our brand as a very cautious brand, a very responsible brand. And now the other banks are following our footsteps and finding opportunities to create similar things. Um, we, like some banks in Pakistan, have decided not to finance certain projects which are harmful for the economy, for the environment. And obviously, it restricts our economic opportunity, but then it helps improve our brand. And I think with the kind of consciousness of sustainability and environment and climate change that exists today in the economy and society, the more responsible you are, the more people will like to bank with you, actually.
Thank you. That's very interesting to hear. I thought it would be completely the other view, that customers will be more caring about their financial returns, and therefore that's what they would expect their bank to do. But you gave completely different perspective here, which is really from a lay person's perspective. It's very interesting to hear.
Yes, but I like to say that it's not at the cost of their financial interest. We, as a bank, will always have to remain very competitive as far as our returns and the interest of the customer is concerned. I should not be using the word interest to confuse the people. The stake of the customer is concerned. But these are the additional things that you can do to help the brand and the customer engagement, more engagement. Uh, and I can give so many examples of all the other things that we have done. For example, sponsored a very high level study tour of students from 6 different universities of Karachi to visit universities in Karakoram, Himalayas, where they did a study of the community. They studied the families where elders are living above 100 years age, because there's a very high life expectancy in that area. The climbers who go to places like K2, there are porter families who go with them. So they interviewed the porter families at how they feel when their father or their brother is going to K2 for 3 months, and there's a chance they may not come. So and now in winter, the students from the mountain universities are going to come to Karachi and study the coastal culture. So, and this is actually helping, because the youth is more excited about your brand then.
Thank you. Thank you very much. Moving on to Dr. Salah, if I may. You talked about Maqasid Sharia and the implementation of Sharia-based strategies to prioritize social environmental impact. I would like to explore to what degree or should environmental and social governance criteria, should they be a regulatory requirement for Islamic financial institutions, given that they have ethical implications within Sharia?
Oh, definitely. I like, the diplomatic answer by practitioners about the Islamic banking. Of course, if we go a little bit back, Islamic banking it's not charity. There have shareholders, and it needs to be continuous. If we talk about sustainability, how can we have a sustainable Islamic finance without making profit? Of course, when it came in the beginning, if we look at when they, back in 1969, when the Minister of Finance met in Morocco, and then the idea to have the IDP, then the issue with creating Islamic Bank was, should we make it Sharia-based or Sharia-compliant? And the idea went with the Sharia-compliant. And you cannot have Sharia-based because a lot of regulators or a lot of countries does not have the suitable regulation to adapt the Islamic finance. So having regulation, of course, Islamic finance, if you want to debate about having it as an ethical finance, is ethical based on what kind of ethics? Any I can be from a different religion and say I am ethical practicing. Therefore, Islamic finance will always continue to be regulated, of course. It has its own unique stamp because it's based not just on ethics, it was based on religious, based on Sharia. And then when we adapt the Sharia principle or the five main Sharia strategy or objective, this will always we kind of forward into sustainability because Sharia, when was taken from the or objective was taken from the Al-Ghazali, was was based on a totally different society. If we look at market, his market is the same as when Al-Ghazali was looking at the Sharia objective. It's not, totally different. Now globalization with a different element involved in the transactions. And you have to deal somehow with conventional side. Either you like it or not, but that's how it is. So regulating Islamic banking according to certain regulation, and of course, yes, it's always Sharia compliant, but it always has to have an alternative because tools sometime, I can say green sukuk, I can call it blue sukuk. Now they came with, as Dr. Wadad was talking about, different colors. Well, was that giving me any purpose to achieve what I'm looking for? So therefore, Islamic finance, even though it has to be regulated and according to the Sharia compliant, it has to, we have to look at it from the different perspective. We want sustainability. We want to use it. If we can deregularize it, but with the regulation of Sharia, then we will have Islamic finance everywhere. So we can't just say that, oh, you're dealing with riba and we have to close everything down.
Okay, so from that perspective, then, would you say that Islamic banks are better equipped than conventional banks to promote sustainable finance, given their ethical foundations?
Those very good questions. Of course, Islamic banking, I can't say it's better, but I could say it's more of what we want. If I am really in a place where I'm looking for a Sharia compliant, what other choices would I have? Either I go with conventional or Islamic finance. So we have to either build the tools around it and then have the Sharia objective around it and then go with what I have, or either then go with the conventional side. Conventional side has a lot of alternative. It's a huge market. You can deal with anything, it's allowed. There is no restrictions. There's no things that you have to always go back to. And like for example in Islamic banking, you have the Sharia board that you are allowing this product to be in and out. So comparing, to be honest, comparing Islamic banking with a conventional bank it's too difficult because a lot of papers there, they said that the performance of Islamic banking is better during COVID-19, during 2008, because they don't deal with the, with interest and all that stuff. But it is difficult because both are running, yes. I mean, like for example, if you are trying to buy a car in an Islamic bank, unconventional, the end result is the same, but the transaction is totally different and the risk is totally different. It's too difficult just to say that, conventional bank or it's easier than they have, or our Islamic bank has more, I should say, more obstacles to reach his result.
Okay, thank you. I would have liked to push this a little bit further, but I see that we're out of time. So if you just give us a couple of more minutes, please. I'll turn to Widad. Widad, would you say that the structure of Islamic finance aligns with the global sustainability goals? And how can it actively contribute to the UN social development goals or sustainability development goals?
Okay, thank you for the question. Yes, I see that Islamic finance products or Islamic finance in general, because of the way or how Islamic commercial law ties the financing to actually funding real economy and adding value, it aligns with the SDGs. It aligns with the seventh goal or the SDGs goals. Why that? Because when we compare Islamic finance to conventional finance, and especially in Islamic capital markets, because that's what was in the presentation, when we compare Islamic capital markets and conventional capital markets, transactions in conventional capital markets are higher. The volume, the depth of the market is much more compared to Islamic capital markets. Why? Because the number of transactions is usually double, triple the actual transaction that happened. There is no delivery of assets in capital markets, in conventional one. There is no real added value to the economy, and that's the difference with Islamic capital markets, instruments that are funding real economic activity, and transparency is a crucial part in the way these products are designed and what they are funding and how this is done. Everything is clear since the beginning. So yeah, I would say they are adding to the real economy.
Thank you. Thank you very much. I see that we are out of time, but perhaps we can still have time for questions from the audience. 2 minutes. Okay, 2 minutes for questions. If anyone has questions for the panel. There's one over there.
Assalamu alaikum. I have a question for the Islamic banks. You've mentioned that you have some initiatives in place for environmental sustainability. How do you measure the impact of those initiatives?
Well, we have an ESG expert in our bank who actually does the carbon impact of all the initiatives, and not only the financial initiatives that we are taking and the business initiative, but also the other special initiatives that we do. So it's a science. So I will not like to summarize it in a general way, but it's done very scientifically. And after this year end, we are going to publish our first sustainability report, which will have all the details. We actually started another initiative that is planting 1 tree per staff in every season, which is monsoon season and spring season. And it is done in a very organized way throughout the country. And the trees are even selected which are environmental friendly, indigenous, and so there's a lot of excitement. And the staff goes with their families to various locations and they plant trees. So there's a lot of work that we're doing in that direction.
Thank you. One more question? There's too many hands up, so okay. Well, maybe you can have 2.
Thank you. Dr. Jassim Al-Okla, I'm Associate Professor in Finance at Anglo Ruskin. A question to Dr. Al-Hammadi, if I may, and probably Mr. Hanif can comment. As we all know that Islamic financial institutions been existed because they have different, because they have Maqasid al-Sharia. The concept behind their existence is they have to comply with and they have to achieve Maqasid Sharia. I think the main issue now, probably Mr. Hanif can comment on this more, that directors or the management in the Islamic banks, they try to compete with their conventional peers. So they have to follow same approaches, or they have to do different operation which doesn't comply with the Islamic Sharia law. And I believe this is the issue, because Islamic banking existed to comply and achieve the Maqasid al-Sharia. So you are out of the competition market. So why you always compete with conventional peers? We have to achieve this. We are better than this in financial performance, and so you have different objectives. You have different goals. So since you are out of the competition, this is what I believe. Thank you.
Thank you. You know, one of the key goals that we have is to provide services and products to the customers who are very riba sensitive. So if we do not have the solutions to the requirements, the financial requirements of the common individuals, what their expectations are if they want to finance a house, a car, or maybe you know, want to have a card. And if we simply want to become a social welfare organization, I think, like my colleague said, this is one of the main objectives of Islamic banks is to provide necessary, important, essential Islamic banking and product and services without compromising on its commercial aspect. Because after all, we are not a Waqf, you know, there's a difference between Waqf and a commercial and a profitable institution, which is supposed to work in line with the Sharia. So yes, I do agree that there are certain products in which Islamic banks are lacking behind, which is the true spirit of Islamic banking, and that is basically the profit and loss sharing. In true sense, we should be doing musharaka and mudaraba with most of the borrowing customers, commercial, the business and the industry and the traders. But that requires transparency of the financial statements. If the customer is making money, and for banks they disclose, and for the government they disclose that they are not making enough money. This may not be the case in Europe, but this is the case in most of the developing countries. So you cannot participate in profit and loss sharing and end up occurring losses, because this is not, after all, your money, it's people's money. So people who have deposited money with us, they expect to get the profit either equal or better than what the conventional banks are giving. So if we start offering profit on deposits less than the conventional banks, and then start lending in areas where there are losses or there are lesser income, the banks are not going to be sustainable.
Thank you very much, Mr. Hanif, and thanks for the question. I hope that answered your question. Unfortunately, okay, sure, please, we'll make an exception.
Um, my name is Adam, and I'm with my dad. And I wanted to know what would Islamic finance would do for little people like me, and what it would do in the future for me.
Thank you. That's a very, very interesting question, and thank you for asking it, because I don't think anyone else would have asked it if you didn't. Me personally, I don't have an answer, but I'll be very, very interested in the experts here who can give us an answer to that. Who wants to take this question?
Well, I think you can also answer, but I will just say that we have a special product for kids below 18. You can open an account. It has the highest savings rate. And over the period, it builds up to very good profit. And your principal is not only kept with us, it is multiplied over the years. And we also have scholarship programs where your parents can save money in annuity form. When you grow up and you are ready to go to university, they will have a complete plan. By then, they will have enough money out of their savings account, which is specially designed for this purpose, so that you can have good education when you go to university.
Okay. With that, also maybe from the sustainability goals, is there anything relating to young people when it comes to?
Well, we do a lot of charity. I didn't want to say that, but Islamic banks have a lot of fund which is accumulated due to certain Sharia requirements, which we are not supposed to take in our profit. In our case, 80% of that fund goes in scholarship. So that is for where the people require funding to pay for their education. For those students, we have, and there were some other bankers around this morning. It's a huge amount being spent on the education in, I will say, in Pakistan, but in all the other countries that I know also, where Islamic banks exist.
Does that answer your question?
Yeah, one thing, Adam, I know you have traveled from Bristol. I know that in Kuwait, for example, the Islamic banks, they have programs for children diseases, and they have charity. They do marathons and all that to support children disease, as well as having not just a scholarship, that a normal scholarship, but they have a kind of funds to build a hospital for children. So that's things that from Islamic banks.
Well, thank you very much, Adam, for asking the question. And I sincerely hope that by the time you grow up, you will find that there are many, many opportunities open for you and your generation from the things that we talk about now, about Islamic finance, about sustainability, about social development, and so on. So I sincerely hope that the future will be bright for you and for your generation. Thank you all. It's been a very interesting session, and I would like to take the opportunity to thank the panel, Dr. Widad Mutajar, Mr. Muhammad Hanif, and Dr. Salah Al-Hamadi. Also to thank the organizers for giving us the opportunity to participate here today. Thank you very much.
Thank you very much, Dr. Abu Bakr, and thanks to your panelists. Now the time for certificates with Dr. Abu Bakr Jabir. Dr. Salah Al-Hamadi. Mr. Muhammad Atif Hanif. And Dr. Widad Mutajar. And now we are going to introduce our fifth and last session for today. It will focus on the economic and community-led development through Islamic non-profit models. This session will be led by Dr. Aqsa Aziz, who is a senior lecturer in finance, School of Economics, Finance and Accounting Department in Coventry University. And will join her to the stage Mr. Haroon Atalla and Dr. Huriya Al-Islami.
See the time from here. That's fine. Okay. Bismillah ar-Rahman ar-Rahim. Assalamu alaikum, everyone, and a very warm welcome to the final thematic session for today. It's a pleasure to be here. Jazakallah khair to the organizers for inviting us. It's my first AlBaraka Summit. It's lovely to meet you all. So I'll be chairing the session, as Ibrahim mentioned. And as an academic, I'm going to start with a bit of context to our topic first. So for Muslims, Islam is not just a set of beliefs, but it is a complete way of life. And it provides guidance on all aspects, which includes finance. Therefore, it's no surprise to see that there are many Islamic financial concepts which are rooted in benevolence and helping others. Now, in this session, we're going to explore how Islamic non-profit models, such as Waqf and Qard Hasan, can promote economic and community development. Now, initially, we did have a third panelist member, but unfortunately, he fell ill as he was going to talk about zakah, but that's why we'll be concentrating on Qard Hasan and Waqf. Now, Waqf, known as endowment, is a centuries-old tradition established as an important foundation within the Islamic commercial law, fiqh al-muamalat, and the Islamic State. It involves the donation of money, benefits, or return from assets, property or assets, the profit of which is given away for a specific charitable cause. Now, giving Waqf means never-ending blessings for the donor as their gift keeps giving in the form of sadaqah jariyah. Now, Qard Hasan, translated as benevolent loan, is a loan given without interest or benefit gained by the lender to those in need and is strongly encouraged within our faith. Allah subhanahu wa ta'ala says in the Holy Quran, if you give Allah Qard Hasan, He will grant you forgiveness. And in chapter 57, verse 11, He says, who is it that will give Allah Qard Hasan? For Allah subhanahu wa ta'ala will increase it in manifold to His credit. Now, Qard Hasan is gaining prominence as it is an ethical and socially responsible alternative to conventional interest-based lending, which fosters economic growth. Qard Hasan brings about mutual goodwill, cooperation, helps build communities and promote financial inclusion. I'll say a little bit about zakah as well, even though we're not going to have a talk about zakah. So zakah is one of the 5 pillars of Islam, which all Muslims must pay. It's 2.5% on our tax on our wealth once it reaches a certain threshold. It's a beautiful revolutionary concept which can end extreme poverty. It's a right that the poor have upon us. Allah subhanahu wa ta'ala says in the Holy Quran, those in whose wealth there is a recognized right for the need and poor. It's an amazing concept because just imagine if the world's 10 richest were to pay just 2.5% tax of their eligible wealth, it would raise a staggering £7.7 billion, which would make a huge difference in poverty alleviation. Now, many people are familiar with these Islamic non-profit models as they implement them on a personal basis, but little is known on how these models can promote economic and community development. So in this session, it's really important because we're going to explore how Islamic non-profit models like Waqf and Qard Hasan can promote economic and community development with a focus on innovation and the challenges in implementing these solutions. So I'm going to start by introducing our first speaker. So our first speaker tomorrow is Mr. Haroon Atallah. He's the chairman for Islamic Relief Worldwide. MashaAllah, he's a chartered accountant, auditor, and aid worker. His previous positions have included being a CEO for Islamic Relief Worldwide for 5 years. He's also served as a group director for corporate services at Transparency International. Currently, he is the Finance and Support Services Director at IDLO, which is the International Development Law Organization in Rome. He has contributed to research on humanitarian work with a specific interest on the impact of counter-terrorism measures on charitable activities. His paper is entitled Initiatives and Impact of Waqf Endowments, Waqf as the Oldest Charity Institution. Over to you, Brother Haroon.
Do I need the mic? Oh, I think this is working. Assalamu alaikum wa rahmatullahi wa barakatuh. Bismillah, alhamdulillah, wa salatu wa salam ala rasulillah. I start with congratulating Sheikh Yusuf al-Khalawi and his fantastic team on continuing the legacy of Sheikh Saleh Kamel. May Allah bless you and make the vision that you said to us this morning succeed, inshallah. So the theme today, as you have seen on all the documentation, is about sustainability, ethics, and innovation. When you think about Waqf, it's easy to come to mind sustainability. If the Right Honorable Naz Shah was still here, I would have said to her, I wouldn't expect much change in the budget. The budget of the United Kingdom, which she mentioned this morning, is pretty predictable. Yes, they tinker with 1 or 2 things here or there, and the newspapers write about it. But if you were to ignore servicing the national debt, you will find that there are 3 areas that consume the budget. So the budget is roughly 1 trillion, just for rounding up the figures. 27 to 28% of that is going to go on social services. 24% will go on health services. And about 17% will go on education. These are the 3 biggest items. Now think about the history of Islamic world, and you will find these 3 areas, social welfare, health, and education, were not subject to state funding. And they prospered and they grew because they were supported by independent institutions. Can you imagine if you told Shahnaz that 65% of your budget is looked after? Of course, to fund this budget, taxes are raised. But imagine if people were in a voluntary way funding these things. Now we know that educational institutions, and maybe less well-known health institutions, and also less well-known, a large portion of social welfare institutions were funded through Waqf. Now, if you lived through the Ottoman times, you would have been fed, housed, educated, treated, all from Waqf entities. So when we're talking about something that is sustainable and ethical because people are caring for each other, you would not find better than the example of Waqf. And then when you're talking about innovation, now it becomes interesting. Because again, many people think that Waqf in Islamic history was about digging a well, or maybe even building a mosque or a school or something like that. And that's not correct. Waqf in Islamic history was and is very diverse, even maybe less diverse now than it was 1,000 years ago. So when you hear that Waqf 1,000 years ago included a lady setting up a Waqf to look after animals that used to work the fields when they reach old age so they can live their final time of their life in a field and not have to work hard. That was a Waqf 1,000 years ago. When you think about animal welfare today, just think that Muslims had that 1,000 years ago and where Muslims are today, to realize the decline that has taken place over this period of time. I want to share some examples from our contemporary world, and especially us here in Britain, but also for Muslims living in the West. Now, as was mentioned in the introduction, I worked for Islamic Relief. I'm a chartered accountant. I joined the organization in '93. And at that time, Islamic Relief purchased its first premises for £370,000 in Birmingham, an old derelict warehouse that used to be used in car manufacturing. Those premises were funded 1/3 of the amount from a generous Waqf contribution for the purpose of having Islamic Relief headquarters by a very generous man from Kuwait. May Allah have mercy on his soul. Kuwait is actually a world leader in contemporary Waqf, for those who don't know. So 1/3 of the value of that property was given by this man so that Islamic Relief would always have a headquarters. This property is valued now at £6 million. I will come back to the challenges later on, but just keep that piece of information in your mind. Now, when we move on to how you manage Waqf in a Western society, if you're registered as a charity, you're regulated by the Charity Commission. You're registered as a company. You're regulated by company law. You have to submit reports. There are international standards. There are accounting standards you have to submit to. When you own a premises, which you're using it for its primary purpose as a charity, you're going to have to enter it in your balance sheet as an asset. Now, if you're holding it as an investment, you're going to constantly review it to what's called fair market value. But if you're holding it as something you're using, then it's going to be on a cost base. So if you looked at Islamic Relief's accounts, you will find it's valued at £370,000, plus whatever improvements were done, less depreciation. So just think about this when you are thinking about challenges of quantifying moving on. I don't want to become too technical on the challenges that face the accounting side of things, but I want you to think about the British Muslim needs today in Britain. We need education, we need mosques, we need cemeteries to bury our dead, we need health services, we need care services for the elderly. And yet, when we think about these services, rarely will you see initiatives fundraising for Waqf for these purposes. If there are areas that we are required to have sustainable funding for, it's areas that we know we will need. We will need healthcare. We will need care for the elderly. We will need schools to educate our children. So we should be setting up Waqf initiatives for these purposes in this country. This is the level of maturity that is required. Yet, of course, we know it is not the case. This is not happening in this way. And that just shows you the difference between Muslims 1,000 years ago and now living in a Western context where we feel very dependent on the state. And this is not unique to the Muslim community, by the way. This is the British community or Western community at large. They're always waiting for the state to supply these services. You pay taxes, that's what you expect to get back. But we know that these taxes are going up and the state is not able to provide the same level of services that people had hoped for. Now, I want to talk as well about the area of innovation. When we are thinking of ways of funding for things like what I just mentioned, just think of using technology and think about the efficiency. What was said in the earlier talks by some of the other speakers about the use of digital technology to achieve greater efficiency and effectiveness in serving people. And to that end, I will tell you that there are some fantastic initiatives that have been done in this area. The time doesn't give us opportunity to go into them and some of the examples, but I just would ask all those in attendance to consider some of the fintech that has been developed by young Muslim entrepreneurs, which is plugging a gap in the market, a niche, which I think, watch them, because they will be growing and they will be growing very fast and achieving great things for the Muslim community. Thank you very much.
Jazakallah khair, Brother Harun, for that insightful presentation. Now we'll move on to our second esteemed panelist speaker. So our second speaker is Dr. Huria Al-Islami. She's the Chief Executive Officer and founder for HGC firm. Now, Dr. Huria is Bank Indonesia award winner as the best national and global Islamic finance activist and the first recipient of the Anugerah Tokoh Alumni, which was awarded by IUM. She serves as a member of the Board of Trustees of RFI Foundation and the Board of Directors, Ethics Global. Mashallah, she's an AOFI Master Trainer, FAA Certified Assessor, IFN Global Advisory Board Member, Sharia Board Member, and Strategic Advisor of Islamic FinTech Alliance. She was appointed on the Executive Board of Badan Pengola Kengungan Haji Indonesia. Forgive my pronunciation, sorry. In Indonesia, in response to a presidential decree to set up the Hajj Fund for Indonesia. This role entailed drafting laws and regulations to form the basis for the fund operation and investment activities, as well as putting the infrastructure and governance in place to ensure the fund achieved its objectives. Dr. Huria is an IMF expert in Islamic finance and a member of the Islamic Finance Advisory Council of the AFIC. With over 2 decades of experience globally, she served, among others, as Director, Group Head Sharia and Governance and Group Legal, Islamic Banking and Capital Markets of CMIB Group. Now, just to warn you, her original bio was much longer, but I just shortened it for the sake of introduction, mashallah. Her paper is entitled Economic and Social Empowerment of Small and Macro Enterprises, SMEs, through Qard Hassan Financing. So over to you, Dr. Huria.
Thank you very much. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh, and good afternoon, everybody. Bismillah, alhamdulillah, wassalatu wassalamu ala rasulillah, la hawla wa la quwata illa billah. Rabbi shrah li sadri wa yassir li amri wahlul 'uqdatam min lisani yafqahu qawli. So it's good to see some of you are still here. Believe me, if there is anyone who is so sleepy right now, that will be me. Because right now it's almost 11 in Jakarta. I just arrived yesterday. But luckily, thank you to Ibrahim. He gave me quite a good topic, quite challenging though. Because if I may just by show of hand, of those who remain here, who are bankers? Bankers, please show of hand. Mr. CEO? Anybody else? Only you and me? Ex-banker? Kalas? Okay, two. All right. I mean, why I ask this question? Because when we talk about Qardul Hasan, usually the term they use. But in Sharia, the real term is actually qard. We are talking about interest-free, no addition whatsoever. In fact, those who are familiar with how rigid the Sahaba, the Tabi'in, the scholars in the earlier days of Islam, observing to this, to the extent, let me share a little bit story with the hope that it will wake everybody's up. Abu Hanifa, one day, he attended this burial ceremony. It was very, very sunny. So everyone actually stood on the other side to get the shade from the house. But he actually stood on the other, far away from that shade, right under the sun. And everybody was querying, like, what happened? Why don't you come to this side? It's very hot over there. And then he said, the owner of the house, I lend him money. If I stand there and take the shade from him, I'm taking benefit from him. And any benefit from loan is riba. That's why I started my question with any bankers here, because bankers don't like qard. And by right, being bankers meaning we have the fiduciary duty that you must give return to your depositors and to your shareholders. Not a bad thing. This is your fiduciary duty. But with qard, how are you going to make it? Right? Correct or not, Mr. CEO? But there are a few things that had happened with Qard Hasan. Before that, why we talk about Qardul Hasan? We go back to the basic fundamental idea of Islamic finance. But before that, Sharia itself. We start with the notion, وَمَا خَلَقْتُ الْجِنَّ وَالْإِنسَ إِلَّا لِيَعْبُدُونَ. All of us, not even just all of us, even the jinn, are created by Allah only with one purpose, to serve Him, to abide by Him, to serve Him basically, And serving Allah, when we put in context of financial industry, what does it mean? In the beginning, we thought, okay, let's introduce Sharia. We do. No, it's not working. No, it goes so far. Oh, something doesn't come out. There's supposed to be halal, tayyib, and maqasid Sharia over there. It doesn't come out. Why is not coming out? There, it doesn't come out. Initially, we started with avoiding the haram because we want to get the blessing from God. If we don't do haram, then we get, inshallah, God will not get angry with us. That's the idea. And it was excused at the beginning for Islamic finance. Why? Because they said, okay, it's still in the state of infancy, so let them. At least they do something that will not anger the God. But then we got used to this. We got complacent, and we continue doing this even after 50 years, 60 years. Can anyone tell me an infant at the age of 50, 60? No more. That's it. Kalas, move from halal to tayyib. We are talking about tayyib, we are thinking of ESG. Well, I always say, you know, Sharia, the context of Sharia is actually more beautiful, more comprehensive than the new concept of ESG, SDGs, because ESG is always all along inside concept of Sharia, we call it tayyib. Because tayyib meaning you do good, not just to yourself, but to whatever that related to you. You eat something tayyib, meaning that you treat the thing that you're gonna eat with kind. This is tayyib. Because if you just slaughter it, you don't care what happened to it before and after, then this is just halal. But tayyib is a step higher, ESG. Then you go step further, because I have very limited time, fulfilling Maqasid Syariah. And when we talk about fulfilling Maqasid Syariah, and the fact, let's coin this with the concept of ownership in Islam. In Islam, the true owners of everything is Allah and Allah alone. And in fact, this is actually clearly stated, yeah, in this, Ala inna lillahi ma fis samawati wal ard. And then the next one, Ala inna lillahi ma fis samawati. So what and who all belong to Allah. That is to say, whatever that we own, whatever that we possess, that we thought ours, they are not ours. In Sharia, they are just those that Allah actually entrusted to you. But in whatever that you possess, in whatever that you have, there are rights of others, including the social rights. So this is something that you cannot actually separate from Islamic finance. That's why I'm saying social finance, which is a new addition now to this financial industry, has always been in the DNA of Islamic finance. Okay, first of all, because it cannot have interest, but fee is allowed. So Mr. CEO, those who are doing card, what they do is they take fee. So in Indonesia, in many countries who are practicing, and this including ISDB, by the way, the Islamic Development Bank, most of their financing using this, especially the one that they give to the government, they took fee. And there is already Sharia standard from IOFI, and many countries, including in Indonesia, we have from our regulator OJK, that allows taking of fee when you manage card. So the fee is for managing it. And the idea, because when you give card, it's not necessarily about your money. Although there is, you know, this notion that if it is your own money, when you give it, don't take fee. But if it is a third-party money, because when we are talking about bank, it's not the management money. It's the shareholders and depositors' money, therefore third party. How about ISDB? It's not their money, it's the members' money, also third party. They are just the intermediary, and of course, we all know if it is you are an intermediary, you are giving your services, you are entitled to the fee. Although the issue that arises later on is the question whether or not you can actually take your fee based on the percentage of your loan. ISDB doing it, many banks doing it. It's been suggested that if it represents the administrative fee, if later on any one of you would like to actually, you know, offering this kind of concept, please go ahead, but better to represent the actual expenses for the administration, not based on the percentage of the loan. But this is interesting, the deferment a waiver. That's why some countries, they differentiate between qard and qardul hasan, whereas in qard is loan. Loan is loan. You borrow money, you return money. You borrow rice, you return rice. You borrow whatever agreed, you return. No excuse to it. But some people consider qardul hasan because of the word hasan added to it. Although qard is already hasan, basically, because you don't give, when you give loan without any addition, this is already, you are doing something benevolent, right? But then some people actually added to it qardul hasan in order to differentiate from normal loan, to indicate that this is loan with the intent of charity. Meaning to say, if they cannot pay it on time, let them be. And if you can waive it, even better. And this is in line with Surah Al-Baqarah, verse 180. When kana zu usratin fanaziratun ila maisarah. No, I forgot. And to forgive is better for you. The top point that become important, the top 2 points, why qardul hasan could be the solution to the main problem that faced by the industrial right now, in the financial industry right now, the issue of inclusivity and the issue of high rate. Because you see, unfortunately, unless you are meeting the KYC requirement, the due diligence, you don't have the good credit history, you don't have the good person to sponsor you, to actually introduce you, and you don't have collateral, sorry. Right now, when we are talking about the size of Islamic finance industry, it's huge. But last month I was here in London, my friend asked me, those countries with good Islamic finance, do you see good growth for the people? Are we just enriching the rich and closing the door to the poor? So let's actually widen our wing. Let's actually consider doing social finance as part of our financial industry, because at the end of the day, if you are doing truly Sharia, this is something you cannot avoid. Yeah, forget credit history, forget collateral, forget questionable. Because why? Because when it is Qardul Hasan, and the good thing is for Islamic finance, you have a door for it, which conventional bank don't have. You have what you call RIA, restricted investment account or investment account, which will be on your off-balance sheet. It's not even in your book. And you can take insurance against it, and you can actually pass the fee for the insurance to your borrower. So it's risk-free. It's not even your money, but you are definitely giving return to them. How? If you want to share the fee. If you don't want to share the fee, then there's no return to them. But then, you know, we have in Indonesia what we call Waqf deposit and Waqf, cash Waqf link. Sukuk and cash Waqf link deposit, where basically people put their money and they just get their money back with no profit, and they are doing it, and it's doing very well in Indonesia. Why? Because especially after the pandemic, people actually have this stronger sense of humanity. People want to help others. So when you put money in the bank, you don't get much. So might as well you put money in the bank, you help people, and at the end, after the tenure, you take back just your money, just capital. So if we already have a case study in Indonesia, very successful case in Indonesia using Waqf, where people just get their capital, so you can do card there. Easier, more straightforward, and cheaper to structure. Okay, Muhammad has do that then. Okay, this is a case study, but although just last 2 points, Ibrahim, sorry. Thank you. The last 2 points, the problem with Qardul Hasan. There are some issues actually. I hope the organizers are willing to share this with you. These are the issues that I have identified. Moral hazard, diminishing value, sinking fund. Therefore, actually, I'm recommending a blinded or hybrid structure, not purely card as a solution. But the point that I would like to highlight here about moral hazard, because sometimes when you know that you borrow money without having to put any addition, and then when even you delay, you don't have to pay anything extra, no penalty, no consequence whatsoever, people tend to actually take it for granted, you know. When they have other obligation, they will give priority to other obligation. They may ignore it, they may actually, in the end, not motivated to repay, to perform, to actually conclude the transaction. So there are many ways that can be that we can actually include in the structure in order to mitigate this risk, among others, as I said, you know, doing the blended, the hybrid structure that basically will encourage them because of the system of membership and all that, yeah. Something similar to Akhawat, something similar to Garmin, but then we have a membership concept, which is, I would say, you know, like an upgrade of the concept. But just interesting case study how people could actually abuse, not abuse, I mean like be very creative with the Qard Hasan. In Indonesia, we have Qard Hasan with collateral gold. So people can borrow money, you give gold as collateral. So what happened, and you'll be surprised to know how this product has been very, very successful, and it is one of the main fee generating income for the banks. Because what people do, they may not need money. It's just that, this is not arbitraging. It's just that the gold price right now is low. So they actually borrow money, put their gold as the collateral, take the money, buy more gold. And then when the price of the gold increase, they sell it and then took the money back and repeat this thing again. That's what they've been doing. So to conclude, giving Qardul Hasan is good. I agree with Brother Muhammad Maki earlier on. He mentioned, sometimes you just need to help. But helping alone, you help people once, okay. You help people twice, okay, but not more than twice. Because then you made a habit, they make it as an expectation. This is not healthy for them, it's not healthy for the society. When you help them also to progress. That's why the hybrid concept. So basically you give the expectation. Now you start with Qardul Hasan. As you move along, as you do it, but you are doing okay with Qardul Hasan, you move to Musyarakah. And then inclusivity is important. In order to actually optimize from this structure, always start with Sharia. Be consistent in the sense that, this is actually for the overall portrayal of the Islamic finance itself. When we talk about whatever, be it sustainability, be it social finance, we need to be consistent. We cannot be talking about it in one forum, be like a fighter for it, and then when it's happened in certain area, we pretend like nothing happened. So that's double standard is not good. Monitoring and assessing impact, that is also very important, because as much as we have seen, the number for Islamic finance has increased tremendously, but we have not seen many people who have been helped with it. So that's something that a step further the Islamic industry may want to take. That, not only that you measure how much money you get back, but you measure also, and you assess and you monitor what people do with it. Is there really multiplier effect in it? Have they actually helped the loan, the financing, help the people? And if it help the people, have that also helped the people around them? Because that's the whole purpose of giving financing, not just make money, but creating better economy for the people as well. Improvement, poverty alleviation. Yeah. I think that's it. And last, believe in barakah. Not just Barakah Forum, but believe in Barakah in the sense that, sometimes there are things that when you do, you think that you are not making much money out of it. But we have a case study in Indonesia where, even giving Qardul Hasan could be a good business. I'll be happy to share with you. Actually, there's data also I included in my presentation, which I don't have time to share. But, when you believe in Barakah, when you believe that you can just make enough money from your fee, but you are really helping others, inshallah, even your business can flourish. Thank you very much. Assalamualaikum warahmatullahi wabarakatuh.
Jazakallah, sister, for your very insightful and informative presentation. So now we'll just move on to our panel discussion. I'll just ask a couple of follow-up questions for our speakers before we open up to the audience. Okay, so Brother Harun, I'll start with yourself. So you mentioned that although Waqf is the oldest charity institution, very little is known about it in the Muslim community today. So how can we change this, and how can we promote greater use of Waqf?
Jazakallah khair. This is the question I was trying to allude to in what I presented when I spoke about the challenges that face the Muslim community here. The best way is to connect it to what people actually need. So if you come to people and they say, you need education for your kids. Now there's a big issue in many parts of Britain where they have a shortage of care facilities for the elderly. You can connect Waqf with care services for the elderly. Another challenge, which might seem strange because I was visiting the graveyards, visiting the burial places for some of my friends who died in the last few years while I was away, and they're all full. They're not accepting any new people, and they're opening new cemeteries very far out. Some Muslims came together and set up a project to do a new cemetery in a part of Birmingham. These are things that Waqf can get involved in. Musharaka is a very successful way that I have seen operated to help businesses and also help Islamic organizations set up, acquire the assets, where Waqf is coming in and you're doing kind of a shared ownership and paying back in installments with a profit back for the Waqf, where you get to own the asset after a period of time, 5, 10 years time. And that is another innovative way that we could do so that Muslims can own the premises that they're using, whether places of worship, schools, etc. That's how the Muslim community, I believe, will become interested in Waqf.
Jazakallah. And just one other question. What would you say to those who believe that Waqf is a complex model and it's difficult to implement?
There is some truth in it, but generally the principle of Waqf is very simple. You're supposed to protect the capital and you're spending the returns. But we know in reality that there is Waqf which is being marketed, including in Islamic relief, where they are committing, for example, to doing a qurbani for you every year in perpetuity. If you make a commitment like that, that means you need to make sure you make a return. The reality of investment is yes, in the longer term, it will go up, it will appreciate. But you might have a year when it depreciates. So what do? Will you still do it even though there is no return? So that means you will have to select types of investments that guarantee a return. That has an impact. So there is this challenge between yield and growth, return and growth, which exists always with Waqf. And this is why I think whoever manages Waqf need to be selecting the types of investments to look at the purpose from the Waqf in the first place.
Jazakallah, brother.
Yeah.
Okay, moving on to my sister, Dr. Horia. How can we promote greater use of Qard Hasan financing in a capitalistic society where people don't see any immediate benefit for giving a loan without interest?
Thank you very much, sister. That's the very reason why I started my presentation with the fundamental, what is the purpose of our creation, why we have been created, and who is the true owner. Because if we are thinking so capitalist, that's the only thing that we have in mind, Qard Hasan will never be there. But the fact that it is there, it is something that we should not ignore. And the fact that, the good thing, for me, to a certain extent, pandemic was a blessing. Why I said it's a blessing? Because, like you witness the people that you know who lost their battle against COVID and all that. Then you realize, there are things bigger than yourself. There are things bigger than just collecting money whatsoever. And if any one of you have ever lost your loved one, then you realize money, whatever that you are collecting, is nothing. Because when you are gone, you cannot even take your most favorite jewelry. Cannot. So you see, at the end of the day, if you or all of us are being reminded of the purpose of life, why we are being created, then we realize that doing good to others, khairin nas anfa'uhum linnas, doing good for others is, if you are selfish, this is what you should do. The bigger the legacy that we can leave to others, the more we can help other people. This is what you are actually collecting for your akhirah. Because you see, sister, this is maybe a bit story I can share with everyone. My daughter liked to go to Boston. And whenever we went there, near the Harvard area, I like to stop by the road, the side of the road, because you'll see all those gravestones, 40, 400 years, 350 years. They've been buried there. Then you see when they were born, they live only 30 years, 40 years, 400 years being buried. One day that will be us. How much you can eat, how much money you can collect for yourself. You see, even if you take 2.5%, which is your zakah, give it to others, to help others. You see, the thing is, the point why Qard is important, because when we do it ourselves, it doesn't have that big impact. You want to make impact, you have to have number. You want to have number, collect it somewhere. Be it a national body managing this Qard Hasan or a blended hybrid structure to give to the needy, to those supposedly unbankable, but they need the help, yeah, or to the bank who is actually having this program. Because you are right, I mean, like if I give only like £10, I cannot even help one person. But if everyone giving £10 and collect it somewhere, and it is professionally managed, believe me, it will make a big impact because we have already done that for the Hajj. We established the Hajj fund in Indonesia. Everyone putting their money, not much, for Hajj fund is quite a lot. I mean, like imagine, but even if everyone giving small money and it is being collected, you see, the impact is in the number. The power is in the number. That's why it has to be structured. It has to be organized. When we do this, you see, you cannot even get fish and chips for £10. You will not feel anything by giving £10. Put. Well, last night I had it in here, total £42. No, but I mean, it's okay, £5. Everyone give £5. Let some put in one bank or put in one organization and let them actually handle it to help the needy. So we can actually include in the financial system those who are otherwise unbankable, those who are otherwise, if they go to bank, they'll get very high rate, while knowing that the high rate could actually put them in the high risk of defaulting. So we can actually try to mitigate these two risks by having this concept implemented, inshallah.
Jazakallah khair, that was really beautiful. Okay, so I'd like to open the floor to the audience. Oh, no? Am I not allowed? Okay, just one question from the audience, please.
There's one there and one here, three.
So you choose, Ibrahim.
There's 4 questions.
There's a few. You choose whoever.
One sister, one brother, I suppose.
Okay, we'll go to the sister then, please.
That's why you asked.
Yeah.
Assalamu alaikum. I'm not a finance person. My background is in construction engineering, but my interest is in my country, Somalia. I'm from London. And my question was actually is based on Islamic finance from a borderless perspective. What's the journey in producing products which is borderless? So, for social sustainability in terms of globalization, access to finance, opening the borders. Thank you.
Jazakallah khair.
Shall I take that? Okay, I have the headphone. The biggest challenge with that is that when you're thinking about an investment, you have to think of regulation. So one of the challenges that face Waqf, for example, if you raise money here in the United Kingdom and you want to take it and invest it somewhere overseas, you have to think, what is the protection you have for that investment? Here, you have the Financial Services Authority regulating. You take it and invest it outside the country, you don't have that protection. You need to consider that. So the risks are high, and you may be jeopardizing the capital, which is the first responsibility of the trustee of Waqf to do, which is to protect the asset. So going across jurisdiction, it might seem simple in the corporate world, which takes high risks, of course, but it's not so simple in the charity world.
Okay, with respect to the cross-border challenges itself, I've written a concise article on IFN. If you'd like, please WhatsApp me. I will actually share it with you. But with respect to, let's actually, try to see how we can overcome that. If you do a structure or a product in the form of sovereign sukuk, for example, or global sukuk, then based on our experience, we have done the green sukuk. Sister Widat has mentioned it about the Indonesian one. We actually structure the product. When you did this kind of structure, there will be no issue because anyone can actually invest. Yeah. So what is interesting, because you include the social finance in it, we have in Indonesia a very successful case study. The ISDB gave award for it, what we call cash wakaf link sukuk. So I imagine if this cash wakaf link sukuk, we actually upgrade it and make it in the sovereign level, it will actually gain the same kind of response, maybe even wider. It's a good idea actually. I may actually tell the Ministry of Finance after this to consider doing that. Thank you.
Thank you.
Okay, thank you. Wrap up the session now. Ibrahim's giving us the eyes. So Jazakallah khair for your attention, and thank you so much for
Thank you very much.
panelists. Thank you as well. It's been a long day. Assalamu alaikum.
Thank you indeed, Dr. Aqsa, and thanks to your guest speakers. I would like to invite to the stage His Excellency Mr. Yusuf Khalawi for the certificates. And we would start by Dr. Aqsa, the moderator. Mr. Harun Atallah. And Dr. Huriya Al-Islami. This session leads us to our special note for today, which is titled The Increasing Interest of International Organizations in Islamic Financial Tools to Achieve Islamic Economic Goals. And this special note will be given and presented by Professor Elijah, who is a professor of political economy and Islamic finance at the School of Business, University of Dundee. His interest in Islamic economics has been developing and increasing in its all various articulations. So we would like to welcome him to the stage.
Hello, everyone. Assalamu alaikum, and thank you for opportunity to Baraka to present about this topic. And when I was researching about topic, actually, when I was given this chance, it was really important to understand how we ended up that international organizations are engaging with Islamic finance in a way. And usually the importance of that is very much circling the legacy, because usually when something comes from the higher level, such as IMF, World Bank, United Nations, that's something actually which provides you legitimacy, credibility, that what you are starting doing actually has a meaning and sense. So this is quickly what we will talk about it, but this is overview where we started from. So the initial stories, but very much from the Western world, USA, UK, China, Japan, and then of course Singapore, which will follow as UAE, Malaysia, and the Muslim countries. So starting with World Bank, we can summarize that the main points or discourse towards Islamic finance is very much narrowed towards, providing the initial education, advisory, or how we can amend, adopt regulations so that they can accommodate Islamic finance, such as in the case was in UK and other countries. Of course, World Bank did not directly engage in the UK, but in some other places which are very much risk affected, and hence trying to provide the space and support for risk sharing Islamic finance in the World Bank institution. Now, more recently, we have seen there are some institutions actually that I just skipped one, but the same story is that the working papers on different sides. The first one was on the Green Sukuk, actually this one, and other one was on Islamic banking and regulations, which provides that these institutions have some kind of interest, particularly in the scientific approach, how we deal with the issues of Islamic finance. On the other side, IMF probably is the earliest one. It goes even into 1997, actually, the first paper that was published, and particularly the focus was on the regulatory issues and how that collide with the issues of interest, garar, and all fundamental elements. That led us to the very much 2000 and the further engagement on the issues of Islamic finance in terms of what are the avenues, particularly in terms of trainings, publication, and research. Of course, 2005 March as a global financial reporting on Islamic finance, so the Islamic finance starting to be included or integrated as a part of the discourse. Very much recently, we find Islamic finance opportunities and challenges are also reported in the annual reports of IMF, and then very much engaging on the advisory role level and capacity building. Of course, the most prominent, or which is currently happening, is the meeting in Bali on the fintech regulations that came as a result on a meeting of the World Bank members, and therefore the element of Islamic finance was also promoted and highlighted. Now, on the back of the World Bank and IMF, of course, United Nations become quite obviously engaged, and these are the main areas that they started to focus. Of course, establishing the Center for Islamic Finance in the Istanbul, but then thematic focus on the private, public, and sector, which led into creating the portfolio of green sukuk interest, evidence-based research, which they are providing for the countries, but then Islamic finance portfolio training as well. And something that I'm also engaged directly is a massive online open course. Now, there was one that is successfully implemented 2 years ago, and you have access through the edX platform, which is free. So you can access Islamic finance on sustainable development. And from next year, you will have access to ESG for Islamic banking that we actually now are recording and finalizing that element. Of course, interestingly, UNDP, since withdrawal of the US and UK and the Western powers from Afghanistan, is still active on the ground. We just have a few months ago Conference of Islamic Finance, which was present there as well, the members from Taliban government who are still trying indirectly the promoting Islamic finance efforts within that regions, but through United Nations efforts. Now, GRP, it's a risk association. Also, their involvement is quite significant in management, certification programs that they provide, research and the publication, global network events. Without going too much in details, also the Asian Development Bank, which is also a significant part in similar areas that the previous organizations are engaged. There are a number of reports, trainings, activities, partnerships that they created. Most of these institutions, actually, we have to recognize, actually partnered with IDB, Islamic Development Bank, in different projects and areas. European Central Bank was, for me, also interesting that they have some policy issues and suggestion of how to integrate Islamic finance within the European context. We find primarily Luxembourg, of course, is a dominant, France, as well, but Germany as well through the Turquoise Bank and other places. Norwegians are now becoming active through different avenues. And finally, because the discussion was about governments, banks, I would like to also close this talk by Bill and or Gates Foundation. That was also for me interesting. Their involvement in Islamic finance, which was mainly through the microfinance that they established, or microfinance initiatives for inclusion and alleviation of poverty. So yes, they have a program collaborating with some Muslim nations. Now that brings us to summarize actually all this, that what is happening. We identified the three main outcomes of these efforts. The number one is the collaboration, and yes, that creates or increases our visibility and legitimacy. We are now here because of the strategic decision of Baraka in London, and we have in the center of the Western world Islamic finance event of such magnitude, such as the Baraka Forum. So this is another way, but this organization, World Bank, IMF, actually provides additional avenues for us or Muslim institutions, programs to collaborate and provide much higher visibility. Training is also part of that. There's many trainings are happening. Particularly interesting one is that provide IDB for different institutions, and whether they are government or international capacity to introduce Islamic finance, deepen access finances, of course, through establishment of Sukuk. UK government is also example of that. Building social and physical capital base. Now, when it comes to institutionalization, you are not expecting these institutions to provide Islamic finance products. So that is what is missing, but they will provide through the partnership programs to SMEs, for example, and contribution to the GDP. Also provide effective way for zakat distribution system, gross economy, wealth management, of course, and the microeconomics initiatives that they are supporting indirectly through the partnership. And finally, we can see the impact side, which is happening. Yes, there is a cooperation, and that is what we believe in, building efficient governments. That is something still IMF trying to implement through the different programs. Financial assistance can be also built on the Islamic finance and poverty alleviation and financial inclusion. Now, these are all great and general things that we can observe it through these organizations in a way of engaging through Islamic economics and finance. But the question is still stay and remain. With all these efforts, we are not expecting, and I don't think so we will ever see that human development initiatives which we would like to see by actualizing what we call the Islamic moral economy or Islamic political economy by bringing ethics, religion, culture as an endogenous part of economic analysis, that policies and applications could be actually tailored for these purposes, and hence the new modes of production, what we call it, saving the land, labor, and capital, and hence creating something original that not only capital will take the alpha, but actually all three factors, so that we can have what we really call it profit and loss sharing entity or profit loss sharing community. Thank you very much.
Thank you very much, Professor Elijah, for this amazing note that takes us to our last step and station for today, which is our closing remarks that are going to be presented to us by Alia Jaffa, who is the Director of International Relations at the Islamic Chamber of Commerce and Development.
Thank you so much. So the last talk of the day, so quite stressful. So Bismillahir-Rahmanir-Rahim, honorable delegates, esteemed speakers, ladies and gentlemen, Assalamu alaikum. So what an incredible day. Who all agrees with me? Absolutely amazing. I've been participating at this summit since its inception 3 years ago, and it's truly remarkable to see it go from strength to strength. Please join me through a warm and a loud round of applause for all those who are responsible for making it happen. If the organizing team, if you can please stand up and be recognized for your work. We have Brother Ibrahim, Hasham, Miss Gada. We have 2 Ahmeds, and most of all, the unwavering dedication of Sheikh Yusuf for this cause and his visionary leadership in growing it to a global platform. AlBaraka Summit is a testament to the generosity of one man. Late Saleh Kamil, may his soul rest in peace, was and continues to be legendary in his contribution to the development of Islamic economics and the world through knowledge creation and dissemination. During the day, I'm sure you must have all observed, we heard the words most commonly used as a solution was collaboration, political will, lack of unified regulatory frameworks, and the need for measurement of impact of Islamic economics. We also heard about the interest of all business people in profit maximization, even within the OIC countries. And this is why this platform is important to us as the Islamic Chamber of Commerce, because we are the sole representative of the private sector of 57 member states of the OIC as their affiliate organ, and Muslim businesses around the world. Now, as per United Nations Council of Trade and Development, and I quote here, the rise of the global south is reshaping global power dynamics, with developing nations playing an increasingly significant role in international trade and economic governance. This shift offers opportunities for development countries to access global supply chains, partnerships, and investments. However, it is our role to build their knowledge towards better business practices. AlBaraka Summits is playing a vital role in creating awareness on how and what by bringing the best in the field from around the world. Today, we heard from some of the finest minds in the world on Islamic economics. Under the Islamic Economic and Collective Responsibility, we briefly heard about the really extensive, rich history, condensed amazingly well. And many of the terms that we heard, social justice, social finance, women's right, moral economy, focus on food security. And for me, the most interesting was there were no market taxes back in the day, and that supported a thriving economy. Also most interesting was the Abrahamic finance, which predates even Islam and practiced by Christians. And as the panel emphasized, we need more collaborative approaches to grow these concepts more broadly, and this gives us this opportunity. We heard about equity finance for SMEs and the challenge of being able to transparently see the profitability of SMEs to grow this type of financing, and how experimental finance may be a way to overcome this challenge. Also highlighted was the role of digitalization in offering the transparency for the stakeholders. Examples of asset-based finance was particularly interesting in understanding how it can shift the focus from debt to equity investments. I also want to mention the recommendation of removing the discrimination of tax incentives on debt, which needs to be reversed for equity financing to attract more investors in this category. During the discussion on the core tenets of Islamic economic priorities, it was highlighted that the top 11 companies of the world exceeded GDP of 57 OIC member states. That's substantial. It talked about the support which is required by emerging brands and how the connect between them and large established businesses can lead to Muslim companies achieving the space in the top 100 global brands of the world. It also talked about the adoption of Islamic economics in mainstream businesses. We need to lead with the business case to make it stick. Beyond profit, we heard about how we can embed responsibility in Islamic banks and investment solutions. Under the topic of economic and community-led development through Islamic non-profit models, we heard about how in the past social health, welfare, and education were funded through Waqf, as opposed to the government, which raises this money through taxes. And increasingly, this is becoming more difficult, making our lives more difficult. And then on Waqf and innovation, it was highlighted that we see a decline of Muslims today as opposed to thousands of years ago because of the work, the declining work of Waqf institutions that are mostly set up by wealthy business people. And we need more Waqfs to support our needs, where we need mosques, educations, health services, elderly care, and so on. The increasing interest of international organizations such as the World Bank, IMF, and some of the other names in Islamic financial tools to achieve the Islamic economic goals. And why? Because these are viable sources of long-term development. And this is adding credibility and promoting the Islamic finance for broader adoption. So as I reach the end of my remarks, I want to go back to our keynote speaker, Ms. Naz, Her Excellency Ms. Naz, that we have the responsibility and the opportunity for shifting global narrative on Islamophobia through our investments. It is important for our well-being and the well-being of our loved ones and our children. With that, I would like to announce the 4th AlBaraka Summit will be held, as always, during the last weekend of October 2025. The dates may shift a bit as we are bringing together a new collaboration next year. So please keep following us online on the social media channels. The theme of next event will be Islamic economy in the non-Muslim countries. I would like to also remind everyone about the workshop tomorrow morning on Sukuk as high-quality liquid assets, and after lunch special sessions on innovation in Islamic economics. And with that, I would like to share my deepest gratitude for all the distinguished speakers who have traveled from around the world to join us today to share their valuable and rich insights. I would also like to thank the lovely participants who have patiently sat through and actively engaged throughout the day. Please join us, continue to join us next year. I was very happy to see lots of people who've been there from the beginning. So inshallah, we look forward to seeing you next year. Thank you.
Thank you very much, Alia, for this amazing remarks. And I would like to call Mr. Yusuf to the stage to give the certificate to Alia Ja'far and Professor Elijah. Please. Aliyah. Thank you very much, everyone. Here our trip got terminated, and we are waiting to see you tomorrow at 9 a.m. in the Albemarle Suite in the first floor. Please follow the signs once you approach to the hotel. So it will be the first floor, not in the same room here. Okay, there will be signs to lead you to the suite. Thank you very much for your time and wishing to see you all tomorrow. Assalamu alaikum wa rahmatullahi wa barakatuh.